So hello, my name's Helga Henry. I'm now an arts consultant. I work with all sorts of companies, but many years ago I used to be a solicitor, a company solicitor. So I've got some information that might be useful to you when thinking about how you want to set up your artistic or creative business. And I'm going to talk you through a few of the different structures, company structures, and see what might be right for you. To start off with, I want to kind of tell you a story about a pretend business that I might suddenly decide to start up. If everything went completely tits up and I decided to start again, you know what? I could always just, set up as a car wash business. All I'd need, I call it Helga's Cleanies. All I'd need is my startup capital, and that's basically a mop, a bucket, some sponges, maybe some car wash wax, and I would literally, that would be it. I'd be ready to start up, and I would be trading as what's called a sole trader. Now, the great thing about being a sole trader is there's very few incorporation needs. There's no formality. I'd literally get up one morning, take my cleaning equipment, knock on doors, and ask if somebody wants their car cleaning. I'd clean the car and I'd get some cash. And that would be it. I'd be up and running and I would be a sole trader. So the great thing is about being a sole trader is it's really easy. And in the same way, you can be an arts freelancer. You just start to say you're available for work, you get some work and you get paid. But things can get complicated. And say in my car cleaning job, I accidentally scratch a car. The person is the car owner's dead annoyed. He wants me to pay for the damage. Who's liable for the damage in that case? Well, it's pretty obvious, isn't it? It's me. And if I'm not insured, then I'm paying for that damage out of my own money. So liability, your responsibility for damage, for debts, for any expenses that might be incurred in making your business is what's known as a personal liability. In other words, I have to pay for it. And so when you're a freelancer, not only have you got personal liability, so it's a good idea to get insurance, you'll also be dealing for tax on what's known as a personal basis. That means Schedule D. You'll have heard about that, but that means you're responsible to pay your own tax and your own national insurance. There's an awful lot of people in the arts and in the creative industries who work as freelancers. And it doesn't always mean that you'll get, low fees. Some people are really trading with very high levels of income, but just taking care of their own tax and their own national insurance. The final thing about that is when I'm running my cleaning business, my car cleaning business, I do have to keep all receipts for my sponges and buckets, any expenses that I have, maybe equipment and uniforms. I keep all those expenses because they are deducted from my income and I only pay tax on the difference. So that's sole trading pretty much in a nutshell. But let's imagine that business really starts to pick up and I can't keep track of all the cars that want me that need cleaning, and I've got lots and lots of demand. I've got a friend called Dean, and Dean wants to join me in my car cleaning business. And so we decide to go in together, and we're called Helga and Dean's Cleanies. And Helga and Dean's Cleanies is now what's known as a partnership. Now, you have to be careful about partnerships, particularly in the arts and creative industries, because very often you can unwittingly enter into a partnership. And a partnership is when two or more people gather together to carry out the same enterprise. Now, sometimes that will be an informal project and you won't really think of it like a partnership. But if it carries on to make a business, then it really can be. So a lot of people are in partnerships and don't know that they are. And there's no formal requirement to register or do anything. You'll both take care of your tax like your two freelancers. But if you start to work together, you might have to look at certain things like How are you going to cover sick cover? What if one of you does more work and earns more money? Are you going to share the profits equally? What are you going to do with profits? So while there isn't a legal requirement to incorporate a partnership, it's a really good idea to have some form of partnership agreement. And that's normally known as a partnership deed. A lot of people ask me, do I need to get a lawyer involved? I think if you're a sole trader, probably not. There's lots of very good places where you can get good information, particularly the .gov.uk website, and I'll send through with the resources some useful links. But a partnership deed, if you're really serious about carrying on as a partnership, I would think about investing in getting a proper document made. There will be an expense, but presumably that'll be worth it because of the amount of work that you're going to get through this vehicle. The reason it's important to kind of get those things sorted out in advance is A, it stops you arguing when the things actually happen, but B, what if Dean now scratches a car? Who's liable now? Well, sad fact is, we both are. What if it's a top-of-the-range Porsche and it's really, really expensive to get a paint job on it because it's a rare chocolate brown colour? Well, the even worse news is, if Dean doesn't have the money, but I do, I have to pay for it. It's called joint and several liability. Joint and several means that you're both equally responsible for debts. Now, if I haven't got the money either, but I've got an engagement ring I can sell, guess what? I'm selling the engagement ring. Because, again, unless you're insured, and you can get insurance, that's what the responsibility is. So being in a partnership is great on one level, because also you've got somebody to be in the business with and you can grow it together and you get lots of support. But you do need to think a bit more carefully about responsibility, insurance, taxation treatment. And at that point, you probably need to get some advice. Okay, let's say that business picks up loads more and Dean and I just can't handle the volume of cars. We're overwhelmed with cars that need cleaning. We might decide at that point to incorporate as a company. Now, incorporating as a limited company will mean that we'll have quite a lot of formality. Limited companies are known as limited companies because the limited bit means that they have limited liability. I'll explain what that means in a moment. But in return for that limited liability, you have to do certain things. So you have to register the company with Companies House, and that requires certain formalities. You have to appoint directors. Those are the people who are responsible for the running of the company. And you will also probably have what's known as shareholders. Do you remember at the beginning when I had my startup capital of a mop and a bucket? Share capital is a similar thing. It's an investment into the company, usually of cash, that gives you an entitlement to a share of the profits. So you get startup capital, you get an injection of money, and for Cleanies Limited, that might be we want to get some premises, we want to get a fleet of vans, we want to get pressurized hoses, whatever. You get the picture. Whatever you need for your startup capital, you can get that from the founders. Dean can put some cash in, I can put some cash in. Maybe we want to get some extra cash, and that can be from another investor. So say Dean's mom or Dean's dad has got some money and they want to put some money into our business. They won't be directors, they won't be working. But we might say, yes, you can put some capital in, you can put some money in, and we will give you a share of the profits. So that's what a company, a limited company by shares is. So because we've expanded, because Cleanies Limited now is a limited company, we might take on employees. Now, just to let you know that you can actually take on employees even as a sole trader, but obviously you're liable for wages and all sorts of things, so you might not want to. But at Clean Ease Limited, we can take on employees or we can employ freelancers. You can contract with freelancers. You can expand your business in that way. Let's say an employee scratches that chocolate-coloured Porsche. Now who's liable? Well, I think we all know it's probably not the employee, but are you as directors liable or shareholders? Well, no, you're not actually. The company is liable. And that's the limited liability I was talking about earlier. It's the company that's liable. So the company needs to pay for that damage to that car, either through its insurance or through its own funds. Now, on a small company where there's only directors and shareholders, that might amount to the same thing, but technically it's very different. That's where all the liability is held. And that's why it's known as limited liability, because the individuals, the directors or shareholders, with one exception, on their personal wealth, their personal belongings, their engagement rings or whatever, are not at risk. I said there was one exception. Technically there's loads, but the big exception that you have to be aware of is trading insolvently. So if you are trading when you know that you cannot, or there is a significant risk that you cannot meet your debts as and when they fall due, that's known as insolvency. And if you carry on trading regardless and you keep incurring debts, if you become insolvent, the insolvency practitioner could say that from a certain date, you really should have known and you really should have just called it to an end. You should have wound the company up. And that's known as wrongful trading. And any debts you incurred during that period of wrongful trading, they could go back and say, well, actually, because you should have finished, that's now for the shareholders or the directors to pay personally. It doesn't happen very often in arts organisations because people, A, don't usually run up debts they can't meet, but B, because they normally shut up shop before you get there. But it is something to get proper advice on. It is something that by the time you're a limited company, I would suggest you need proper accounts advice. So that's whether you get a bookkeeper or employ an accountant. Actually, even as a freelancer, if figures aren't your thing, honestly, I think a bookkeeper who can help you through that and help you do your tax and do it all correctly so you haven't got a headache, they're worth their weight in gold. So as I said, if limited liability is a bit of a benefit, it's a boon really. It goes way back when it encouraged business so that people's own personal assets weren't on the line. But there's a payoff for that benefit, and the payoff is transparency. So if you are a limited company, your details have to be on the Companies House register and you have to update them yearly. And you have to put your accounts online. Now, if you're a small business or what they know as a micro entity, they can be very simple accounts. They're just basically your balance sheet, what came in the year, what went out, what you've got left. But there are still, because of the format of the accounts and because of the way they're held, does mean that people can look you up and work out what's going on in your business financially. The flip side of that, of course, and we'll talk about it when we're talking about getting contracts and securing work with people or deciding to extend credit to people, because that's effectively what being a limited company allows you to do, buy things on credit. It gives people somewhere to look to see if you're credit worthy. So keeping good accounts, keeping a good set of books, doing all those things in a timely way is really good, because once we get to talk about procurement, once we talk about people wanting to hire you, they can look on Companies House, look at your records and see if you do that sort of thing well, if you're late, if you've failed to file your accounts. And that just can be a red flag or a warning bell that you're not running your company in a business-like way. So it might seem scary at first. Again, I'll put some links up about where you can get help. The .gov.uk site is really helpful, takes you through all the stages. A couple of things that I would really also suggest is things called shelf companies, which are companies that are already gone through the incorporation stuff, and all you do is buy one and they change the name for you. That can save a lot of time and hassle. And as I say, getting comfortable with the idea of doing your books. I have little automated things. I have a little receipt. I have an app that captures my receipts, and my bank account will generate my invoices. So I just can send all that in very quickly, and it takes care of it all. So we've had a bit of a canter through sole trader, partnerships, and limited liability companies. These have all been for-profit companies. So what happens with the profits? When you're a sole trader, that's your income, you're paying tax on it. When you're a partnership, you're splitting the income, splitting the profit in the ratio you agree in your partnership agreement. And when you're a limited company, you can decide how much of that profit you distribute to shareholders. So that might be the case that in Clean Ease Limited, some goes to me, some goes to Dean, some goes to Dean's mom. And then the business, when you're a limited company, the business is paying tax on its profits, and you are paying a lesser amount of tax on the dividend as income. Final word about shareholders. It's great if you get, Dean's mom has put some money in, that's been really helpful. But what if she decides that suddenly she's watched A Place in the Sun and she wants to buy a house in Lanzarote? She might want the money out of the business. You need a shareholders agreement that will say what happens to those shares should they come up for sale. A shareholder may want to leave the business. In family businesses, that can be really difficult. So again, another thing to think about if you're going to get investment by bringing a shareholder in is to have an agreement about what's going to happen should certain things occur. Should the person want to exit the business and take their shares out? Should they, in the event of any of the shareholders' death, what happens to those shares? Because they would be inherited against the will. And what happens if you all fall out about the future of the business? All of those things it's really useful to think about them. I hope I haven't made this sound too difficult, because actually there's lots of help along the way. And really the most important thing is that you understand the difference between these things so that you can pick the one that's right for you. So earlier on, I told you about the various structures that you can be for your creative or artistic business in a for-profit way. So sole trader, partnership, or limited company. There are a couple of others, but for ease, these are the main ones. They're known as for-profit companies, but really what they should be called is profit distributing companies. Because actually every company needs to make a profit or you go under. So even if you're a charity, if you're a company limited by guarantee, you still have to make more than you spend. That's just how you survive. The difference is what you do with that profit. When it's a not-for-profit, it's called a surplus, and it basically is just reinvested back into the company. It doesn't go to shareholders. So I'm going to tell you a little bit now about different not-for-profit structures. So the big point about being not-for-profit is if you're not-for-profit, what are you for? And you're usually in the arts for artistic creation, young people and self-expression, well-being, Could be all sorts of activism, could be all sorts of things that you're for in your not-for-profit. Now, when you are an artist of any type or creative of any type, there are lots of times that people want to make a not-for-profit company to expand their reach, to get the benefit of that limited liability that I talked about, and just to be an organisation that's got more heft, an ability to take on staff, maybe have premises, and get a board who can help guide the business, help them grow, give them support, and really nurture that artistic vision that you're wanting to promote. The key thing about most not-for-profit models is that there will be an external board. And the key thing about that is you may ultimately lose control over what you want to do. It's no longer just about what you want to do and where you want to go with things. You will have to have regard to what your board says. Depending on the structure you choose, an artistic or an executive director, an artistic lead could be on the board, but if you're a charity, you can't be. So that means that ultimately all those legal responsibilities, all that liability that we talked about before is actually held by a group of other people. And I think artists and creatives really need to think about if that is what they want. A lot of people rush into it because there are lots of advantages, and we'll come on to them in a moment. But just know if you go for some form of not-for-profit structure, you are abdicating some of that control. You're also abdicating a lot of the responsibility and liability. So it's an even balance, but you really have to be happy with the idea that you're going to give up control. The structures kind of follow the path that I told you about with the car cleaning company. The easiest thing that there is an unincorporated association. And that's basically like a club or a society. They won't have incorporated, they'll probably have a set of rules. There are lots and lots of unincorporated associations in the not-for-profit sector. Playgroups, often football teams, cricket clubs, things that have been going for years and years and years, often are not incorporated or formalised in any way, but have a set of rules, maybe even a committee, and they just carry on really easily for many years. Another thing you may have heard of is a CIC, a community interest company. I'm going to give you an example of a CIC so that you can get the concept of them. A community interest company is a company that's set up with what's known as an asset lock. So an asset lock is the company owns something really important, and there are restrictions as to what the company can do with that asset should it want to wind up or close down. Let me give you an example. There is a ferry from Glenelg to Skye, the Isle of Skye. As you can imagine, that ferry is an absolute vital lifeline to the people on the Isle of Skye. Now, if that were run by a commercial line like Stena or P&O or Fred Olsen, they could decide that that's not a profitable line to run anymore, that they don't want to run that because it's not making them any money. And they could withdraw it. And of course, that would leave the people of Skye, and the people on the mainland really, that would really make life difficult for them. So what they've done is they have a ferry, a large commercial ferry, and it is owned by the Glenelg Skye Community Interest Company. So the thing that has an asset lock is the ferry boat and all that goes with it. The ferry boat is maintained for the benefit of a community, the community of the people on Skye and the people who want to visit Skye. So there's your asset, the boat, there's your community, people on Skye. And if anything were to happen to that company, if it were to go bust, they could only give that boat to another company who wanted to benefit the declared community. In other words, the people of Skye. So it's a really clear example of a community interest company, a company with an asset that's been set up specifically to benefit a community. Do you remember we talked about companies by shares and companies by limited by guarantee? You can have a community interest company that has shares. And in a minute, I'm going to tell you about a company that's limited by guarantee. But just to say that a CIC can be both. If you want to set up a CIC, again, there's lots of formalities. It has an entirely separate process. Because they're new, the good news is that they have very standard templates, quite modern documents. The document you need to set up company is called a Memorandum and Article of Association. Your mem and arts or your constitution. Very long words. Suffice to say, if you want to be a CIC, there's standard documents on the website. You just download them, sort them out for you, and submit them. So it's a relatively straightforward job. You may want to get help with it, but if you're careful and read everything, you could probably do it yourself. So again, as we go up in complexity, the next type of not-for-profit company is a company limited by guarantee. And as I said earlier, the reason that this is called a company limited by guarantee is it has all the benefits of a limited company. The people, they have directors, they don't have shareholders, they have subscribers. So people who go, it's a good idea for this company to exist. It will have objects. So again, I talked about if you're not for profit, what are you for? And you might have objects about the education and promotion of visual art, or the education and enjoyment of theatre and performance art, or dance, or whatever it is. When you make a surplus, instead of having shareholders, me, Dean's mom, instead of having shareholders to give a share of the profits to, what you're doing is putting the money back into the company. You can do that when you're a company limited by shares as well, by the way, but you don't have to. With a company limited by guarantee, you have to. There's no shareholders to give it to. So all the profits is staying in the company. You're still paying tax on that surplus though, don't forget. And as a not-for-profit, you can sometimes get some advantages around discounted business rates. Sometimes you can get the sorts of benefits that charities can, but not always. So it really depends. As an artistic lead, you can still be on the board and be paid. So you can be paid both as a director, an artistic director, and you can have a board. Mostly in arts organisations, you will have a volunteer board of directors. The role of a board of directors, and in a charity that they're often called trustees, I'll come to in a minute. A lot of arts organisations want to become a charity, and I can see why. There are some very significant advantages. One of the biggest advantages is that as a registered charity, you can apply for lots of other grants from other trusts and foundations who will only give to registered charities. And that to me is one of the big advantages. And that's when I talk to people who are thinking about becoming a registered charity, that becomes one of the big reasons that they want to, the ability to leverage in funding in that way. And that's true, but you really need to think about it notwithstanding. The other things that that happen to charities, they don't pay tax, corporation tax. Obviously, if they've got employees, they're still paying all their employment taxes and various things, but you don't pay corporation tax. So with a company limited by guarantee, you make a profit, you're still paying corporation tax on that. With a charity, you're not paying any corporation tax. If you occupy premises and you are You don't have to pay business rates. So again, that's a saving there. And there are lots of organisations, software companies and various places who will automatically give a discount to a registered charity. Often training providers will. So you can often get things at a discounted rate. Now, obviously, there's lots of benefits there, but you have to weigh that up against, again, with those benefits come additional and enhanced responsibility. There are only 4 reasons that you can set up a charity. They're called the 4 heads of charity, and they are the relief of poverty, the advancement of education, the advancement of religion, and other purposes beneficial to the community. Now, most arts organisations who are set up as charities go against the advancement of education head. So, again, a bit like Charities House, a bit like Companies House, rather, if you want to find out about charities, it's all online. So you can look up any number of arts charities, big and small, and you can see their constitutions, their memonarts, how they've expressed their articles, their turnover, and what they're about, because there are very, very strict reporting requirements for registered charities. You'll see that a lot of them will be the advancement of the education in visual arts by exhibition, participation, workshops, teaching, blah, blah, blah. You have to go through quite a formal process to apply to be a charity. It's all on the Charity Commission website, but there's a form. You have to show what you're doing, show how you are advancing those aims, how you're giving benefit to the public, and also that you're not political. If you have a founder member who you intend to pay, you have to explain why that founder member has to be paid and continue on in the charity. Once you've registered as a charity, you have ongoing requirements. You need to prepare special accounts. They are done in a very specific format that's mandated by the Charity Commission, and they don't look like just normal company accounts. They're more complex. If you get money from a trust and foundation that's only for, say, a specific project, or that's only for, say, a building project, you have to show that money separately. That's known as designated funds, and you have to account for that money separately. So there needs to be a special place in your accounts. I think really what I'm saying is if you're a registered charity, you probably can't do your own accounts. You'll need to get not only an accountant, but an accountant who knows how to do charity accounts. It's really important. You'll have a board. A board's known as trustees. They are specially required to take care of the objects of the charity and to make sure that any grant conditions are met and that you are not breaking charity law. It's much more regulated. You can't, members of the board cannot be paid to be on the board. So that means if you're a paid member of staff, like an artistic director or an exec director, any sort of lead role, you can't be on the board. And that's what I was saying about, and given that overall the board has final sign-off on strategy, business plan, funding conditions, while they delegate the authority to the staff to do things day to day, they may disagree fundamentally with a direction you want to take the company in. And if you can't agree that, there can be a standoff. It's rare, but it's not unprecedented. There have been cases, if you look around the last few years, of where a board and the founder have effectively fallen out, and it's really just caused the demise of the company. Finally, there's a new type of charity, relatively, called the Charitable Incorporated Organisation. A moment ago, I told you that there are various registration requirements for charities, and registered charities both have to do the Companies House annual return and the Charity Commission annual return. That's quite a lot of bureaucracy. A CIO is a new type of organisation where you don't have to do both. All you do is register with the Charity Commission, and all you have to do is do an annual return with them, including a financial statement. So you just don't have to duplicate. It's a little bit simpler, but you still have all the responsibilities we talked about. And finally, I guess a word of warning for me is that lots of people say, yeah, we're going to become a charity because that way we can get money from trusts and foundations. That's fine. And yes, you absolutely can. But just remember a few things. It's an incredibly competitive marketplace out there. Trusts and foundations are routinely massively oversubscribed for funds. There's an impact on your planning cycle. You might have decided that XYZ charity is absolutely tailor-made for your work and they'll love your work and they're bound to fund you. But they might only have 2 application points in a year. And if that's in June and December, and you're now deciding that you want money from that charity, it's August, you're going to have to wait till December before you even put the application in. And it might be February before they tell you. So you wouldn't be able to start the work until March, April. Timetables might be very much more drawn out. Of course, you can still trade as a charity. You could still go out and sell your services, but there is a restriction on your trading activity. It can only take up a certain percentage of your activity. Of course, what some larger charities do, and I used to work at the Hippodrome, and I hope they don't mind me talking about them as an example, but they have two companies. They have the registered charity, and that owns the theatre and puts on the shows and sells the programmes, and does the education work. That's the charity wing. And then there's a trading wing, and that runs the bars and the restaurants and the commercial meeting rooms and the more commercial arm of the organisation. The commercial wing makes profits that it gives to the charity, so the trading arm pays no tax, and the profits go into the charity and get applied to all the great work they do, the education work, the creative work, commissioning new work. So you can of course trade, but if you think that your main investment, the main bit of investment you're going to get is money from trusts and foundations, just really think about that planning cycle and really think about the impact that is going to realistically have. There's an awful lot that can be gained from being a charity, but don't think it's the answer to all your prayers because it brings a whole new set of challenges. Finally, the only thing I would also think about is if you are a freelancer, or if you are a limited company, or even a company limited by guarantee, and you really want to do something charitable and you think there's a charity that could really allow you to do some amazing work, think about partnering with a registered charity. Don't just set up on a charity because you want to do something about the environment and you've heard there's lots of money for environmental causes. Think about partnering with a charity that's already working in that space and doing an arts program with them, because actually you've probably got a better chance of hitting all sorts of goals around that piece of work than thinking we have to become a charity and do everything ourselves. So I hope this has given you some ideas of how to make that choice. There will be some additional materials that I'll leave online, useful links, a bit of a comparison document, and there's also going to be a Q&A. So if you've got any questions, just come back to me and I'm sure we can sort out what it is you need to do. So I'm just going to round up this training video because we've talked a little bit about company structures and how you might want to do things. But whatever your structure, there's some stuff around delivery that applies to everybody, whether you're a freelancer to a really large arts organisation. And so I just want to spend a few moments talking to you about what a project life cycle is and what the stages of them are. And there are 4 main phases really. an initiation stage, a planning stage, a delivery stage, and an evaluation stage. And I know there are videos elsewhere in this series that can give you some creative evaluation tools, but this is just to give you an overview really from initial spark of an idea through to finally bedding it all down, finishing everything up, and knowing that you've done a complete delivery project. There's a document that I'm going to leave to download that also might give you this route through in a bit more of a flowchart way. But let's talk initially about the initiation stage. And that will be when you have that first idea. You'll think about a project that you want to do, maybe a community that you want to do that with, and an idea that you want to pursue. So after that initial idea, that initial spark, really it's time to do some research. Look around about what's being done, do a real deep dive into what's already happening, who's already doing something. Has somebody done something like this before? Doesn't mean that you don't do it necessarily. It just means that you've either got some collaborators or some stuff to learn about or some ways to build on the thinking. A lot of times I see people who've effectively come up with an idea that they think is super unique and it's been done several other times. Doesn't mean you don't do it, just be aware of that. And the other thing at this initiation stage is that you start to identify potential partners. It's never too early to start doing this. I know a lot of creatives sometimes are really concerned, like, I haven't got the funding yet, I don't know if this is an idea, I don't know if it's going to happen, I don't feel like I can say anything until it's a real concrete idea. I would encourage you to talk to people, confidentially, evidently, if you need to, but talk to people and get relationships with them so you can start to build those partnerships as early as possible. You'll probably need to for fundraising anyway, and you'll definitely improve your idea. Every time I think I've got this wicked idea and think it's fantastic, the minute I start to share it, talk to other people about it, it always gets improved. Don't be scared of having those tentative conversations on a confidential basis if need be to start shaping up your ideas. The next phase, when you've maybe fleshed out your idea and got some partners in board and you know roughly what the project actually is a more specific phase of planning. So the first thing I always think about is budget. Even if it's an outline one, try and think of all the things you're going to need. Top tip, people always forget about research and development costs, almost backfilling some of the time that you spent fleshing out your idea. That's when you're also going to maybe more specifically identify those stakeholders and suppliers. Stakeholders, people with an interest who might want to contribute to the project or fund it, and suppliers, who are you going to use? Are you going to make a video? Do you need a website? Does it need a designer? Do you need workshop leaders? Who might you start to use so that, again, you can flesh that out and make it really real? Obviously, it's this point that you start doing fundraising. I'm calling it fundraising, but that might be you're actually selling. Is somebody going to buy this as a package? Are you going to raise funds from somewhere like Arts Council or the City Council or a trust and foundation? But that's when the fundraising comes in. And if you've done everything up to now, you should have enough information to write a solid application. And it's at this point you also might want to do what I'd call an overall risk assessment, not an actual delivery risk assessment, but a project risk assessment. What are the risks of doing this? What are the risks of not doing it? What's the impact of it being delayed? Some of those headline risk assessments. And then we get to execution phase. So this is when you're actually going to start. You've got your money, everything's in place. Write a detailed project plan. A lot of times I've trained people in project planning and they kind of look at me and go, well, that's just a list of what to do. It's like, yeah, that's what a project plan is. But have you thought about all the steps and the sequence that they need to happen in? Gantt chart, planning tools, doesn't matter what you use, numbered list, daily lists, doesn't matter what you use to plan, just have one. Contracts and admin. It's at this point that you'll be entering into formal contracts with those people you were having informal agreements and conversations with before. Again, don't step over this step. Don't have to be very fancy and formal, but it is tons better if it can be in writing. I'm going to be doing some work around contracting in another video. Your baseline evaluation. Everybody's so excited to get started that they sometimes forget that evaluation starts right at the beginning. How do you know how far you've gone if you haven't measured where you are right now? Think about what you might want to do as a baseline evaluation, a sense of where you are right now. And then finally deliver. If you've got your detailed project plan, you can monitor as you go. Really take care of slippages. Something's 2 weeks late. Things never go according to that lovely Gantt chart and the coloured in boxes you did at the beginning. But keep amending as you go. Otherwise, you really just get caught up. That's the execution phase, but actually that's not the end of the story at all. The final phase is evaluation or closure. You need to, whatever the project is, whatever it's done, you need to do your wrap up. Pay people, make sure all the accounts are settled, chase people for invoices. That's what I always have to do. Thank people, written thanks, appreciation, just make sure that people feel valued for their contribution. Take a moment to reflect on what the lessons that you've learned, either individually or as an organisation. Again, taking the time to do that and wrap up properly, close properly, can be so valuable because it feeds in to your next set of initiation. And in fact, I probably should have mentioned, in the initiation phase, go back to lessons learned in your research phase. Documentation. Again, people are so glad that things are over and they're like very often moving straight on to the next one. Where are those fantastic testimonials that you got? Where are those amazing images? Where's that piece of writing that you did? Or make sure that the documentation you have around your project is findable, both internally, like you know where it is on your drive, but also, is it on your website? Is it where people can share? Have you got some sort of shareable, whatever it is, text, video, whatever it is, where's that documentation, and make it work for you. And then very often there'll be a final report, particularly if you have to do that for funders or stakeholders. But even if you don't do that, it might be nice to do a little bit of a wrap-up communication, maybe sharing some of those images, maybe giving some thanks. That final report is when you know the project has really happened. So delivery, often people get very excited by the idea, or often people get hung up on the actual doing, but the whole cycle is actually from initial idea to closure. And those are all the stages. And to me, I was asked, please talk about how to do delivery. That's what how to do delivery means to me. So in this video, we've taken a little look about how you might set up as a business, how you might set up as a charity or not-for-profit, and therefore attract funding rather than selling, and also, regardless of your structure, how you deliver projects. I hope it provides a really firm foundation for your creative or artistic business, whatever it is that you choose.